ask you a question. Right now, entrepreneurs with solid businesses are being denied funding, not because they aren't qualified, but because they're applying at the wrong door. Banks turn them down, and most of them don't know there's another door entirely. I've spent 37 years watching the funding system from the inside, and what most people call getting denied is actually the system working exactly as it was designed to funnel you back into waiting. Today, I'm going to show you what actually creates business funding access outside of banks, the mechanism the system doesn't advertise, and how to position yourself for it. Here's what I want you to stay for, because certain funding sources look closely at a group of business profile signals that a traditional bank may weigh differently. And if those signals are missing or unclear, you may be applying before the system can accurately even evaluate you. So first, let's talk about the real problem. Banks evaluate you on a snapshot, tax returns, personal credit, and time in business. That evaluation may not capture the full picture of an entrepreneur's operation, especially when the business information is not separated, consistent, or clearly documented. Because the truth of the matter is, the enemy is the evaluation system you are being scored on, not your worth or your effort. Your income is only one part of the information the system may require. Most entrepreneurs keep applying to banks because no one ever told them the non-bank funding layers exist, and it runs on completely different criteria. You've been trying to get into a building through the front door, but there's a side entrance most people were never shown. Same building, different criteria to enter. Now, today I want to share something that most people never get taught. Business funding access is created through positioning, not just revenue. Different funding sources place different weight on different signals, depending on the product and the lender. That may include your legal business entity, an operating business bank account, documented revenue, business credit data, cash flow consistency, time in business, and your personal credit. None of these signals guarantees approval. Together, they help a lender understand what it is evaluating. For this video, I call that collection of high reported utilization funding profile. It is not a universal approval formula. It is a way to see whether your business is positioned clearly before you apply. And the reason many entrepreneurs do not have a clear business funding profile is not because they are behind. It is because nobody ever showed them how the different pieces connect. That's called the business funding profile. And most entrepreneurs don't have one, not because they're behind, but because nobody ever taught them how to build it. The truth of the matter is, a denial tells you that your profile did not meet that lender's criteria at that moment. It does not tell you that every funding source will evaluate you the same way. The next step is not to assume approval. The next step is to identify which part of the profile was missing, unclear, or mismatched to the product you were pursuing. So first, let's talk about the real problem. There are several funding categories that may place different weight on your business profile than a traditional bank loan would, and each category may require a different kind of positioning. Cash flow-based lenders may review recent bank business activity, often including several months of statements. They may place meaningful weight on deposit consistency and cash flow patterns, but personal credit, time in business, industry, and other factors can still matter. Then you've got business credit card issuers, the net 30, and revolving accounts. Build your business credit profile through trade credit. This This becomes the foundation for bigger approvals later. Some vendor accounts and revolving business products may help establish business credit when they report activity to the appropriate business credit bureaus. But reporting policies vary. Many business credit cards may still require a personal guarantee, a personal credit review, or a hard inquiry. The key is not to assume that every business product works the same way. The key is to understand what the product reports, what it requires, and whether it fits your current position. Then there's revenue-based and alternative SBA lenders. They approve you based on your revenue patterns, not your tax returns. Some revenue-based lenders may place significant weight on recent business revenue and cash flow activity. That does not mean personal credit and other documentation are irrelevant. SBA-backed financing can still require tax returns, financial statements, bank statements, debt schedules, and other underwriting documents, even when the lender is not a traditional bank. The requirements vary by product, lender, industry, and time in business. That is why funding source has to match the position of your business. I'm going to say that again. Each of these doors requires a different key. Most people show up with the wrong key and call the whole building locked. Now let's talk about what will not work, because the what not is just as valuable as the what. Most people are spending time and credit pulls on paths that lead nowhere for their current profile. Applying indiscriminately to lenders without understanding their criteria can lead to weak approvals or denials or unnecessary inquiries. A limited business credit history may be a problem for a particular lender or product, but it is not a universal rule across every funding option. Unnecessary hard inquiries can add friction, especially when several applications are submitted too close together or to lenders with very different criteria. Gross revenue alone may not give a lender enough visibility. Clean separation between business and personal finances can make cash flow easier to verify, but each lender may have different documentation requirements, and waiting until the business looks better is not a strategy. Waiting by itself does not build documentation, consistency, or a stronger profile. Positioning has to be deliberate. Here's what I want you to remember. Applying without understanding the criteria can cost you time. Create avoidable inquiries and produce denials that do not tell you what to fix. The better move is to understand the funding source first, then position and document the business for that specific evaluation. This is important. I'm going to say that again. The system is not designed to measure effort alone. It is designed around criteria and documentation. And most of you were never taught how to speak that language, not because you are incapable, but because the process was never explained to you, and most people were never taught that language, not because they're not smart enough, but because nobody with access to this information was talking to you. So, same person, same money, different positioning, and it makes all the difference. Now, let me share this with you. You've probably been told your problem is discipline, budgeting, or simply working harder. Those things may matter, but they may not be the root problem. The deeper issue may be a financial system you've not been shown how to use yet. So I built a free tool to help you identify which layer is creating the most friction. In about 5 minutes, you can do this, and it's called the CBL Financial Positioning Diagnostic. The link is in the description. There is no cost, no pressure, just a bunch of clarity. Very important for you. Now, this is something we got to know. We have learned today is a standalone mechanism. What creates access and what blocks it? The full CBL Wealth Blueprint goes further. It gives you the diagnosis of your specific position in the funding system, the sequenced build path, personal credit, then business credit profile, then cash flow positioning, then leverage, then personalization layer, the accountability structure to execute it. This isn't about working harder. It's about working in the right sequence. Success doesn't happen by accident. It happens when you understand the system and position yourself the right way. So do me a favor real quick. Subscribe to this great channel. Hit the like button because we want many people to see this so that they'll be on top of this information just like you. And drop a comment below. Tell me, have you ever been denied funding and not known why? I read every comment, every single one. And listen, I want you to have this deep down inside. I want you to be blessed. I want you to prosper. I want everything you touch to bless and prosper. And the way it's going to do it is you're going to learn exactly what you've got to have and what you've got to do. So you be blessed. I look forward to seeing you again real soon. Be blessed.